Hey everybody, welcome back. It is Tuesday, and I hope we have sound and everything else is good. So we have a lot of stuff to do today. I'm going to go through this, but hit the like and subscribe if you can. I'm still definitely very, very much shadow banned, and we found out the reason why. It's because I mentioned something that I'm not supposed to mention ever, beginning with C, and I won't mention it again. Anyhow, that's why. But the good news is, I'm going to try something today. I'm going to do a double bill. I'm going to do a golden cross trade. I'm going to analyze all the history of Bitcoin golden crosses since inception, do all the math behind it, and what would happen if you bought at the golden cross and you sold at the death cross. So whoever's into that, let me know. That'll come about 20 minutes after this video, or you can watch it tomorrow if you're back in Europe. So let's just jump in. Again, a lot of ground to cover. The story today is called the AI arms race because it impacts crypto and traditional markets too. And there's a lot of stuff that's all becoming connected. Also, there's some things becoming uncoupled. So we'll talk about that too. So let's go. Let me see if my audio is working. Testing. Yeah, it is. Good. Okay. We got sound. It's always good. Oh, I forgot to mention, it's a disclaimer as edutainment. And a big thank to everybody out there, moderators in chat, and the sticker people. But I have an apology to make. Last time I did OCTA, I made a mistake. It wasn't a math mistake. I missed a 2. So it was a cut and paste mistake where the 2 somehow got lopped off. But you guys may remember how many Big Macs you get for 100,000 Satoshis around the world. That is not equal to $3.63. It was $23.63, and 100 million sats is 1 Bitcoin. But all the rest of the data I covered was the same, like the number of Big Macs and everything else. I think I mentioned in Malaysia, you save for 100,000 sats means you have to skip 9 meals because that's how many Big Mac meals you can get in Malaysia, etc. So again, apologies for that 2 missing, but I guess we're all human. Let's start with the good news, everybody. So let's jump in. Let's look at the past week divided by Bitcoin and crypto market. You can see Ethereum rebounded really well. It was lagging hard behind Bitcoin all 2023, but now it is mean reverting. And you can see Sol slightly red for the week. BNB, DOT, HBAR, Cardano, Litecoin, even meme stuff is up. And this OKB has sprung out of nowhere. Now it's become a top name. Even though the box is very small in that chart, it's a top 10 crypto. Let's look at the actual performance in terms of returns. And this was done right at the moment. In fact, Bitcoin currently, as we're looking, is just shy of 23,200. And again, after this video, I will do a golden cross kind of trade simulation, analyzing the history of data if you trade the golden cross. But maybe that's part of the reason for a little bit of strength today. But again, ETH up 6% for the week. Binance, it's nearly 8%. Remember, Binance also is lagging behind Bitcoin all of 2023. And a lot of other good news. So things on average are green, which is good. Now let's look at decoupling. This is one I keep an eye on every single week. You can see that the Qs over the last 90 days are up only 5.76%. In fact, they've fallen today, whereas Bitcoin's up 25%. So we are beginning to see decoupling of Bitcoin from other assets. Also, Bitcoin's getting a lot of attention from institutions. I'll talk more about that in a minute too. Let's talk about some on-chain stuff first. This is from the team at Glassnode. And they put a great chart together that talked about a few things, but I modified their chart, so I hope the team does not mind me adding some big red bottoms. But this chart is about Bitcoin reserve risk. And here, basically, higher values indicate both price and hodler spending is elevated, and lower values indicate both price and hodler spending is declining. And a structural change in the trend appears to be underway as this oscillator continues to be approaching its equilibrium position, with 55% of all trading days below the current value. And this suggests that the opportunity cost of hodling is decreasing, while the incentive to sell is increasing. So that may sound like bad news, but it's actually good news. Let me tell you why. Because it's important. When you look at how bear markets have ended since 2012, 2015, 2019, and now 2023, is we have this beautiful round bottom, which I drew in from this line. So basically, when people start to make profits, net realized profit on their trades is positive, they begin to sell. It's also a sign we are coming out of the bear market. Just look at those red circles. Look at the width of them, the depth of them. Very similar every single time. So if history repeats, the end of the bear is well over, ladies and gentlemen. So let's do a little woohoo. And I can also tell that the sentiment is much more positive out there ever since November. So thank you all for surviving 2022. It was nasty, but again, there's lots of alpha out there. We'll talk about this one too, which I'm quite excited about. And this is part of the title of this video, the AI arms race. So let's talk about the graph. Here you can see this title, Indexing Protocol, Graph Token soars back past $1 billion market cap. Well, it's a lot higher than that now. The graph here, according to CoinMarketCap, the spike reflects the platform's significant ecosystem growth in 2022, particularly during the fourth quarter 2022. Everything happened all at once, and the graph removes the need for data consumers like app developers to expand complex infrastructure for gathering on-chain data, and it supports indexing from 26 different blockchain networks like Ethereum, Near, Arbitrum, Optimism, Polygon, Avalanche, Celo, Phantom, Moonbeam, etc., etc. So it is a very well adopted technology. But what's going on? Why am I excited? Well, we've been working on a model called the ATR model. I shared this back in November and talking about the analysis of if we get halfway back to an all-time high, what is the best risk reward from the top 100 crypto tokens? And the answer was number 1, the graph. Number 2, Solana. Number 3, Engine. Number 4, Phantom. Number 5, Near. And then 6 is Aave. But that was impressive. And that made me put the graph into my portfolio that we built on the 12th of December with my portfolio against Ran from Crypto Banter. So I'll add a video to that later if anybody wants to see it. But those portfolios have been doing very well since the 12th of December. And that's not that long ago. But again, time moves fast in this market, and so do tokens. Let's look at the chart for the graph here. And you can see it's up 300% since that actual slide was presented. So actually, I want to remind everybody, you're going to find treasures in all my videos. Make sure you subscribe. Try watch them all because you never know what you're going to miss. Sometimes I'll blast through a key slide like this one and not dwell on it too much. But you never know the value that is actually there until things transpire 2 or 3 months later. So let's look at the chart. You can see here 300%, and many people believe this is attributed to the whole artificial intelligence revolution. Many have been surging with what some people call the chat GPT effect. CoinMarketCap here talked about this too. And again, the adoption of the graph has been stunning. The tokenomics have gotten a lot better since I analyzed them in 2021. And that's one of the reasons why, based on risk reward, I felt it was a top choice. And we're beginning to see this explosive return. So again, I always say don't chase replace after a 300% move. You probably don't know you're jumping on this train, but it's interesting to see where it could potentially go. And they raised about $50 million, I think, in a funding round from Tiger Global back in early 2022, if I'm not mistaken. So that's the graph. Now let's look at some 2-week performance of a mix of assets. I'm going to come back to crypto, but I'm going to take a step out to continue on the AI thread for a second. So those people who only are here for crypto, hold on a second, I'll be right back. But this is the 2-week performance of assets. You can see the NASDAQ is up 8%, S&P 3%, Bitcoin only 2%, dollar index the same, Ethereum flat, and gold down 3%. I will touch on gold during the gold cross later in my subsequent video. But that's interesting. We look at stocks the last 7 days. Here you can see Microsoft 8%, Google over 8%, Meta, huge bump, Tesla, big bump, Apple, big bump. So risk on is back, tech is back, and it's good after a hard year last year. You can see Amazon is still hurting because of earnings, but everything else is enjoying that AI effect, I believe, is a big part of the trigger. Now, continuing on the AI, because this impacts us all. Everybody uses a search engine every single day. Let's look at this little head title here. Google and Microsoft AI arms race could have unintended consequences, and AI ethicist warns. I didn't even know there was such thing as an AI ethicist, but it's clear, in my opinion, not anybody else's, but in the past, Bing, which is the Microsoft search engine failed miserably. So they really need to shore something up. And that's why they bought ChatGPT for $10 billion. But a lot of people are afraid of unintended consequences of AI chatbots, racism, bad words, etc. A lot of people are concerned about the guardrails aren't in place for this nascent technology. And a lot of people are worried that, I think one analogy was they're building a Jurassic Park without proper electric fences to keep the dinosaurs in, for those who like dinosaurs, but leaving the gates open, not even having the electric fences on. So a lot of people are very afraid of this, but this is not going to stop the AI train by no means. 2023 is the year of the AI revolution. And in fact, it might be for the next 8 to 10 years. Now, Google, in their fight back, and by the way, I've never lost confidence in Google. A lot of people said, jump ship, sell Google, buy Microsoft, but we'll talk more about why I didn't in a second. But if we look at this, Google have had a lot of AI plans for a long time. They said a couple of years ago, they were flipping from being a search company to an AI company. And the CEO, Sundar Pichai, announced a project at a blog post only a few hours ago describing their new Bard system. So Bing versus Bard. And it is what they call an experimental conversational AI service that will answer queries to take part in conversations. And it'll start off with trusted testers in a couple of weeks before becoming widely available to the public in the coming weeks. It's not exactly clear what capabilities Bard will have and if it'll be better than OpenAI's ChatGPT. But a screenshot encourages users to ask Bard practical queries like how to plan a baby shower, what kind of meals could be made from a list of ingredients for lunch, all that type of stuff. So it could be pretty cool. My money, again, remains on Google. And let me explain why with some data. People fail to see this. They think, oh yeah, they have a new AI ChatGPT or whatever. Remember, the gateway to this tool is the browser. And who dominates the browser market? Well, it's Chrome. You can see here rough numbers I just threw together this morning. Chrome is, I can't quite read this, 70.9%, I think. Yes. Safari, 8.2%. Firefox, 7.1%. Internet Explorer, the old Microsoft Explorer, 2%. There's the Microsoft Edge. Not quite sure what that is. I don't use any Microsoft products. And Opera, 2.2%. It's interesting to see that Opera is bigger than Internet Explorer. And Mozilla Firefox is bigger than all of Microsoft combined. And they were really the leaders at one stage. Then you have, I never heard of Segu Explorer, and Brave is a tiny fraction of 0.2%. But that is kind of the lay of the land out there in terms of the browser wars. And the browser is the gateway to the AI. So I still think Google is in a very safe position. Let's look at the Google chart and if they're benefiting from the AI effect. And it looks like they are, which is good. There was a lot of fear, uncertainty, and doubt that the US government is going to break up Google. But again, as I said a few weeks ago, if they did that, they'd have to break up Amazon, they'd have to break up Meta, they'd have to break up Microsoft, they'd have to break up everybody. But here you can see that the charge is on and the rebound is enjoying the AI effect for those who own a little bit of Google. So let's get back to crypto now. Sorry for that little divergence. Mixing it up. But here, let's look at the very positive crypto fund inflows. Again, week 4 of positive inflows. 76 million last week. That's the 4th consecutive week of inflows. Year to date, $250 million has flown into funds, mostly by institutional investors. And that is big. The total investments, asset under management for these have risen 39% year to date. And they're now at over 31 billion, I think. And this is the highest level since August 2022. And a lot of money is coming in from all across the world. USA, Canada, Germany, Sweden are all pumping money into crypto, which is good. So people are now shaking off that bear market and just jumping headlong in. And it's never too late to join and jump on the train, if you can catch it. Let's look at flows by asset. There was a huge flow into Bitcoin. You can see there 68.5 million. Year to date, 193. So it's really, really doing very well when benchmarked against other assets. So Bitcoin is not dead. Well, we'll look at some other slides as well that may give some that impression. But here, the rest of the inflows were from the short Bitcoin, about 8 million. And there was also, the opinion remains divided over the sustainability of this rally, but I think we're definitely at a new floor based on the gravity around 23,000 for Bitcoin over the last couple of weeks, breaking through, and we're just above it again. So we'll see. But looking at all this money flow too, that gives me a good positive confidence of where we're going forward. And altcoins also saw some minor inflows. Solana, $500,000. Cardano, $600,000. Polygon, $300,000. And let me see. Polygon, $300,000, etc. But the Ethereum inflow is extremely small at 700,000. So I guess maybe people are concerned about Shanghai and the unlock of the proof of stake in March 2023. Now let's talk about altcoins for a second. Yesterday, or last week I should say, we were in Bitcoin season, but now we just spiked out of it. This has been a massive spike off that 25 level bottom. And this basically is a ratio that looks at if 75% of the top 50 coins perform better than Bitcoin over the last 90 days, it becomes altcoin season. And you can see there's a lot of change happening right now. And it's quite drastic, especially when you look at things like the graph going up 300% in a very short window of time. It's kind of stunning. Let's break it down and look at the performance of the top altcoins versus Bitcoin over the last 90 days. So green in the middle, it's black unfortunately, but that is Bitcoin right there, right between ETH and Monero. And then you have on the left-hand side, the new layer ones. You've got your Aptos up a massive, let me get this number right, 294%, Phantom 200%, the Graph 188.6%. That's now, because it shot up so much since I put this together, that's now 300%. Lido, FSX, and other things there. You'll see other items have also recovered quite well after being beaten down back in November. And then on the right-hand side, maybe, I don't know, but there's a lot of old L1s that haven't really moved yet. You can read them for yourself there, but some of the names that are kind of not doing very well. And considering what the market has done over the last 90 days, if you're holding an asset, and I will not mention any names because there's no need, but if you're holding an asset that hasn't budged, like literally it's just flatlining, that's never a good indicator. And that's kind of what the ATR model does, which identified the graph as a mover. So watch for things that are just stable. Eventually, most things do bounce, but if you're stagnant and dead after such a move since November, that's not a good look. Now let's look at Bitcoin versus alts in terms of daily active users. Here we have Bitcoin added to the list today just to show you the huge bump in Bitcoin because of the NFTs on Bitcoin. A lot of people are concerned about, is that a bad look? But my opinion is, no, it's not. And I know people say, well, maybe there's some bad pictures or whatever. It's a decentralized protocol. The more users, the better. And here we see a spike in users more than Ethereum. In fact, Ethereum has also spiked up to 428,000, Bitcoin 580,000 daily active users. Solana's number 3. Solana was number 1 last time I did this, and it's fallen down the list because of the activity on Bitcoin. So that's a good thing for everybody. Then you got Polygon, 272,000, Cardano, 65,000. Always super steady around that level. And Near creeping up 55k, AVAX, and then Aptos. That has a bigger market cap than pretty much everything except for Ethereum. 10,900 users, which is just a stupid valuation, but that's crypto. People don't look at fundamentals. Anyway, back to Bitcoin. This is the Bitcoin realized profit loss ratio. There's a couple of things just to note here is you can see the structural changes again in dominance between the two. And follow the collapse in price in November, all-time high, from the all-time high in November to the other hit we had for a whole bunch of black swan reasons. You can see a whole regime dominated by losses ensued. We went through a very long, nasty bear market. Many believe we are out of it. We have been out of it for a while. But this drives the realized profit loss ratio below 1, with increasing severity with each subsequent capitulation in price action. But nevertheless, you can see here, this is the first sustained period of profitability since April 2022, the exit liquidity event. That's when all the smart money started dumping. And we're not going to be caught out again. We now have built a whole bunch of wiring to be able to see when this happens. So the alarm bells will go off instantaneously when that happens. In addition, you can see here small caps are crushing it. This is the performance since beginning of the year of small caps versus Bitcoin versus large caps versus mid caps. You can see here small caps are up nearly 50%, while Bitcoin's only up 34%. Large caps 34% and mid caps 29%. So these small little names are coming out of nowhere, like the Graph, etc., with that massive 7-day return we've just seen, and of course the 2-month return of 300%. These are things that are really shaking things up. And that's why I've also been saying for a long time, this time it's different. People talk about, oh, well, the early part of the bull, it's all Bitcoin dominance. It's like, no. People are going YOLO straight into altcoins fast. Now, speaking of other news, a lot of people are concerned about this interview in Bankless. It was very, very good, but Toly is a very straightforward guy. He doesn't pull any punches. And a lot of people felt it was very, very bearish and lost confidence in Solana from watching this video. But you have to read between the lines very carefully. And as he went through the whole interview, he started by saying, well, if the Fed increased rates to 10%, that could kind of smash everything and impact crypto. So only Ethereum is left, etc., etc. But towards the end, again, he says, where's the effect of, he's way more bullish than he was in 2018 or 2019. There's so much funding that's still happening in crypto. There are so many smart young people that are joining the big companies, the big projects, building amazing products. And he says, if you looked at all the product launches from the inception of crypto to now, he said, this is the key piece. He said, where's the effect of what's going to happen over the next 12 to 18 months is going to be way more than everything else that has been built over the last 10 plus years. And if people are launching products with product market fit, they're going to get users. Again, Solana is obsessed with being the first platform with 1 billion users. And it means crypto is going to survive. So net takeaway for me from this is product market fit is key. Watching daily active users is key. And most importantly, ladies and gentlemen, the next 18 months will be bonkers. Seatbelts on. It's going to be a fun time. And I'm excited to be here with you all. Next, JP Morgan agrees with Toly. JP Morgan Institutional Services crypto and blockchain to soar in prominence this year. And this was a survey from them. And Jamie Dimon from JP Morgan hates crypto and everything else. But they have little satellite offices, I guess, that do research and publish it fairly and squarely, which is great news. And breaking out one piece, you can look at crypto trading as on the rise from the institutional perspective. Again, it was a survey of institutional professional money managers. And crypto and digital coins products traded will go from 58% in 2023 to 69% in 2024. And the increase will be 11%. So it is the fastest growing asset class for trading by institutional investors. Again, their bread and butter is things like commodities and credit spreads and foreign exchange, et cetera, emerging market stuff, futures and options, precious metals. But now they're jumping into crypto. Again, exciting times ahead. Now we've got to talk about market expectations. Looks like it could be a very good Christmas too. And this is a forecast from Charlie Below. Big thank you to Sanjay for sharing with me. These are the market expectations for the Fed funds rate out to Feb 2025. And, we always say markets are forward looking. Well, if they are, they can see what's going to happen. Basically, this thing expects the peak to happen, March 2022, March 22nd, 2023, we'll get about 25 basis points, take us up to 4.75 to 5. And May 3rd, maybe one more 25, and that's it. Even all the Fed presidents who are extremely bearish are now becoming very hawkish. Dovish. I mean, not bearish. I meant hawkish. Now they're becoming dovish. And basically, they all pause real soon. And then rate cuts, according to this chart, based on expectations, will happen later this year before Christmas. Now, because the whole market knows about this, they're already planning ahead and pricing ahead and investing ahead. It's only a matter of time. The question is when. Once the pause happens, again, that's a couple of months away at most, and it's only going to be 25 basis points, then we'll see what happens. They're still very concerned about inflation. Services inflation is still there. We covered yesterday in the macro video. And thank you all for watching that, by the way. I hope you enjoyed it. But that is good. Now let's look at what this looks like. This is basically the survey. And we are super close to the end of Fed talk. And Powell is sticking to his measured approach for now. and that's helping front-end interest rates back off from their highs today. The 2-year yield now is down about 5 basis points to about 4.4%, and the terminal rate eased to just about 5% for the June meeting, which means we are right at the end, ladies and gentlemen, which is good time. And after that, it's just a matter of time before the pivot happens. But as you saw from risk assets, we're already risk on right now. Now, sorry for being so long-winded. Bad news time, everybody. First of all, with alts on fire, shorts are still getting hurt. When you break down this and what people are still losing money on, they're not losing money on shorting Bitcoin, but they're losing money on things getting away from them from the altcoin side. So the vast predominance of losses that are being made right now are people who are shorting altcoins. So be careful out there. Don't jump in front of a freight train. I always say that. You want to be on the train, not jumping in front of it trying to stop it, because you can't. Next, equity valuations are above fair value. This from Jurian Trimmer from Fidelity. And his various valuation models all suggest that the market is trading several points above fair value. You can see there about 18.26 times earnings. And this is kind of where we are both in earnings and the rate cycle. And the bear market, according to Jurian, bear market may or may not be over. Either way, between technicals, valuations, where we are in the earnings cycle, the S&P 500 trading at 41.90 approximately. Is not a great level at which to be increasing allocations. I agree with that. And the market wants and expects a soft landing Goldilocks scenario. And after last week, we were at peak Goldilocks, according to Jurian Trimmer. So we'll see. So I do expect things to take a little bit of a breather, but you never know. Remember, when you look at the stock market as a whole, 40 to 60% of the companies in the S&P 500 are zombies. Okay, they're just going to waste away over the next 8 years. But watch the black holes that absorb the money. The Googles, the Teslas, the Nvidias, all the stuff that we love here on this channel. In addition, this is an interesting one. This is peak globalization. Apparently happened 15 years ago, according to Matthew Klein's calculations. Great little chart here, but a lot of people thought peak globalization was in 2022. Nope, it wasn't. And there will be a massive period now of deglobalization and rebalancing of economic independence. That is a bad thing, I believe, for global trade. The more trade there is globally, the wealthier the world is. And this will probably involve a shift towards more regional or local production, trade and investment. Factors that could drive this trend include increasing political and economic nationalism, supply chain concerns, change in technology and demographics. This will all impact where we go and who the winners and losers are in the global economy going forward. So China imports, for example, manufacturers, even including parts for re-export, are at a lower share of China's GDP than they were before they joined the World Trade Organization. So again, crazy times ahead. If you're a global investor, watch this space carefully. Watch for those winners and losers as we go forward. Okay. Nearly done. Time for the ugly news. Sadly, in unlock news, a couple of names here I want to make sure you're not in the coming up unlocks. And this will be a new section I will cover to make sure you're aware. But like things like Glimmer, Moonbeam, big unlock coming. Big unlocks actually happening up to Valentine's Day, February 14th. 13% on Sandbox, the metaverse play. $271 million worth going to be unlocked. $20 million on DYDX. I heard rumors that DYDX wasn't going to do that, but according to this, they still are. It's about $110 million on BitDAO, $70 million in Aptos, $41.7 million in Ape Coin, etc. All this juicy sell pressure is coming your way, so be careful if you hold these things. Now, even if things unlock, it doesn't mean they're all going to be dumped on the market at the same time. But typically, gradually, there will be sell pressure, so watch out. And you can actually go back historically and look at things that have had unlocks, and they just go nowhere. In fact, many of them are on this list that I showed here. Okay, look down here to the right. A lot of those names on the right had big unlocks over recent history. So just be careful, ladies and gentlemen. Let's get back to more ugly news. Layoffs are ramping up. Thanks, JP. Good job. Today, Zoom, which is the video conferencing stuff, Dell Computer, a lot of big names still cutting, 6%, 10%, 12%, 15% of workforce. all the way down, and it's just getting worse and worse. And technology is laying off first, and the rest of the industries will follow. Again, everything has a very long lag effect. This is going to really, really be ugly as we go forward. In addition, per Jurian Trimmer, you can see here in this chart, this isn't his chart, but this is from Morgan Stanley. Basically, it says the price downside is ahead of us because many people expect earnings to fall. Forward EPS growth is now negative for the 5th time since 2000. And history shows price downside is in front of us, not behind us. But again, as I go back, if you're in winning names, they will be just fine. If you're in names that get hit or are not able to compete during the recession, that will be ugly, and that could bring the whole index down. Okay, so with that, everybody, I'll be back on in about 20 minutes. I'm going to drink some tea, and then it's afternoon tea time, and then we'll talk about the golden cross trade for Bitcoin, for those who are purely into Bitcoin. So thank you all. I hope you like the content. Hit the like and subscribe if you haven't already. Don't normally ask for that stuff, but now I feel I have to. See you soon.